Hi everyone, it's Blessed Emmanuel here, and in this video we are going to look at a simple strategy for the beginner. But before we dive into it, let's take a look at the disclaimer in the intro. Okay, so this is uh this is how the strategy works. As you can see, this previous high was broken. That's why I marked out the break of structure. It was broken by this bullish move. So that means we are on a bullish trend. Okay, so as you all know, when we are on bullish trend, we look for buying opportunities. The opposite is when we are on bearish trend, we look for selling opportunities. But for this strategy, we will enter trades irrespective of the trends, as I will show you just in a few minutes. So for us to enter sales, we start first by marking this high and this low. This is current higher high and the current higher low. For us to enter sales, we want to see this high as we've marked out. We want to see that high being broken. That's the first step we want to see for before we enter sales. But for us to enter buys, we want to see this low being broken. So let's start for how we can enter buys. We want to see that low being broken. Now it has been broken. So what's the next thing? Because you're looking for buys. The next thing is to see, we want to see this supply that broke that high, that previous low, fail. We want to see that supply fail. The supply that broke this low, we want to see it fail before we consider the buys. We want to see it fail like that. So when the supply has failed, this now shows that the price wants to go up, because the supply that has been dominating the market has now failed. So we take the Fibonacci retracement. I'll only show you that one entry strategy for now, but the video is basically for this strategy, for you to understand this strategy. It's a strategy for both beginners and progressing traders. We enter buys. As for me, I usually target 3. My minimum risk to reward ratio is always 3. My maximum is 4. So we target 3. So the other thing we want to see is price retrace back to that 50% Fibonacci of our Fibonacci retracement. So we want to see price retrace to this zone, 50%. That means we are buying at discount. That's the trade. That's how we enter buys with this strategy. It's as simple as that. So let's take a look at how we enter sales. Sales, how we enter sales. Let me do this for the sake of beginners. Okay, for sales, I said we want to see this previous higher high being broken. There we go, it has been broken. So, what else do you want to see? We want to see this demand that broke that high fail. We want to see that demand fail. So, after that demand has failed, that's when we will enter sales. So, we want to see this demand fail like that. Then we use our Fibonacci retracement for entries. You can either say set a sell limit or wait for market execution to enter the trade. Our Fibonacci retracement helps us to sell at premium. As for me, as I said, my minimum risk to reward ratio is always 1:3. My maximum is 1:4. This is how this strategy works. So the next thing we want to see is a 50% retracement, or we want to buy to sell at premium. If you understand what that is, we target 1:3, 1:4. And those small targets are best for this strategy. Okay. The other thing you need to know about this strategy, as you can see, I only had the 30 minutes time frame and the 15 minutes time frame, which means I don't care about those higher time frames, be it 1 hour, 4 hour time frames. I don't care about that, because whatever happens on the higher time frame, it first of all starts on the lower time frame. That's why I usually consider the lower time frames. Okay, so let's go to the live chat example of a trade that I took. I think it was 23rd October. Yeah, here's the trade. Yeah. Okay. So the first thing, as you have seen, I came and marked this high, this previous high, as you can see. So let me just clear the chart and show you how I entered that trade. Let me clear all these tabs. So the strategy is that simple. You don't need any time frame. Don't need any terminologies for you to know this. It's as simple as that, so long as you understand how to read the market. So this is the high. You need to mark it accurately. You need to make sure it is accurately marked. So I came to the 30 minutes time frame, and as you can see, price is bullish. So the other thing, after marking that high, we want to, for us to see, for me to consider sales, I want to see that high being broken, or else I would have marked this previous low here. For me to consider buys, I would want to see this low being broken. So when price came to this level, I have marked out already that I mean that previous high. So I narrow down to the 5 minutes time frame. to the 5 minutes time frame. There we go. You can use either the 15 minutes time frame, the 5 minutes time frame, but for me I usually use 5 minutes and below for entries. So price came, and this was the demand that took out that previous high. Just a minute. Yeah, this is the demand that took out that previous high. So we want to see that demand fail, which means we want to see a good change of character. The demand fails, then our next procedure step, we said we mark the 50% retracement. As you can see, you need to make sure that that high has really been broken, and that's what happened here. So we mark out using our Fibonacci retracement, then we enter cells. That's how I executed the trade. We enter cells. Targeting with our stop loss just right above that high. Targeting a 1:3. That's mostly for me. 1:3 risk to reward ratio. And that's how that's how that trade played out. So the strategy is as simple as that. It's not complicated. It's very easy whether you're a beginner or a progressing trader. And there are also some certain time zones that which I usually trade, but I won't talk about that in this video. Maybe in the next video. But I do teach that in my BE Trades platform. So the BE Trade students are already familiar with this strategy. Yeah, so if you've reached this far, make sure to click the like button, subscribe to the video, and let's meet on the next video.